Hello, my friend. Welcome to the True Secret Sauce series. Let's discuss earnings, the holy grail of stock market. There was a time when earnings was a primary driver of stock movement, and even now, earnings creates a substantial movement in stock prices. And earnings sometimes create surprises by showing a strong sales or a weak sales, and that translates to big higher prices or falling prices. So where there is earnings, there are opportunities, and where there is opportunities, there are risks. I was talking about the uncertainties, and I'm just going to show here. This is Micron Technologies, and in the Thinkorswim platform, this is the expiration date, the number of days. But look at here, this is called the IV or the volatility. And look at all these things. There's a 40% volatility index. The volatility in MU is a little higher, but look at that one July expiration where it has a higher IV of 48%, or that translates to plus or minus $4.40 move. And this means following earnings, the market expects the stock to go up $4.40 or go down $4.40. That translates to roughly about $27 to about $36, give or take a dollar. As long as the earnings surprise is limited and structured, most of the time the stock price is going to be within the range of 27 to 36. And if I was selling a straddle, I would be happy winner. But every now and then there is some bad reports on extremely good reports. Let me show you. Here is the stock price X. X is the US Steel, and look at it. $30. It was the day before it was $30, and actually it was going up. They were expecting it to go up, and then next day it had a big fall following a weak earnings, a $5 width. And the straddle, if you had sold it before the earnings, might have been about $2 or $3. So still you had a big loss, and on top of it the stock had pretty much reversed the trend and started going down substantially, adding to your losses. Here is another example. This is Netflix. I think the stock was about 102, 103, and they had a very good earnings, and next day it went up to 115 overnight. So now your straddle is basically selling a call and selling a put, would have collected about $5 or $6, but this move is about $15. So even though it collected $5 or $6, now you have a $10 loss. Don't get me wrong, if you are an option seller, earnings is one of the best, or certainly a very good way of making a decent trade, because always the volatility is high and the volatility crush happens literally overnight or a day. I don't do it just because of the periodic losses that I started incurring, and these days with algorithms, once there's a bad earnings, all algorithms pile on and keep pushing the stock price down, or keep pushing the stock price up and up, add it to the short coverings and things like that. Your losses gets multiplied. Play with earnings in your paper account. I mean, I would say at least 40 or 50 earnings to see how much you're making and where you're getting a big loss, and so you get a good feel of it. There are plenty of sources to know when the earnings are coming, what is the earnings whisper and things like that. The best place that I have known is, of course, Tastyworks platform, where you can filter by the upcoming earnings, exclude it or include it, and make a decision on top of it. As I was showing the Netflix and US Steel's stock where it had a big move, some of you might be thinking, If the move is so big, why can't I just buy an option and make a good profit? Makes sense. The reason that does not work in the long run is because of the high IV. When the IV is high, you're paying a lot more for taking a position in that particular stock. So if the straddle was costing, let's say, $1 on a normal day, during earnings it might be $1.50. Yes, if the stock moves way above $1.50, let's say $5 or $6, you make money. But most of the time the stock is within the range. So buying an option when the IV is high is not a good idea. In fact, buying an option in general, I do not think as a good trading strategy overall. So that is just to get you an idea of what the other side of the trade would look like. So happy and safe trading.